Hello and welcome back to the Danko Financial YouTube channel. Andrew Danko here. So today we want to talk about how to analyze a stock. Now this is from start to finish, the whole kit and caboodle. There is really, there's no better starting ground than, step one, okay? So I'm going to choose a pretty well-known stock that we've all heard of. The stock is Coca-Cola, all right? Well, the company is Coca-Cola. So the first thing I'm going to do, the very first thing, I'm going to look up Coca-Cola. And ultimately, I want to figure out what the company does, who the company is, get a loose idea as to what I am buying into, all right? Because a stock is not just a number or a ticker for that matter. What a stock is a piece or a share of a company that you're investing in with the hopes, of course, assuming that you're buying the stocks for the reason of investing and holding for a long term or even short term for that matter. You're betting on the stock to do well. You're hoping that the company does well. But again, you can't look at the stock as just a stock. The stock is a company. You have to know what the company is, what they do, all right? So one easy way to do that is to go right to their website. In this case, Coca-Cola is massive, so of course they have this "where are you from," so they can probably switch the language. But we can scroll through here. We see their ultimate product, their biggest product is of course the soda that they sell, right? And we all know that because they're a household name. But if we scroll through, we can actually see that they probably sell other products. I would assume. Yep, right there we can see that they're starting to sell coffee. And I'm sure if we continue to scroll through here, we could probably find a lot more that they do other than just the soda. But in any case, their identity is a beverage company. All right. So, and obviously they're a pretty well-known beverage company. So the next thing we're going to do is go ahead and just look up CocaCola Stock. All right. Name of company and stock. Real simple, right? So we are looking right now at Coca-Cola's stock price chart. Okay, we can see obviously Coca-Cola here. We can actually look at what's called a stock ticker, which is how the company is identified on the stock market. So if somebody was to say, hey, check out KO or stock ticker KO, you would click KO stock, and you would come to the price chart of Coca-Cola. All right. Now, first thing that I'm going to do, especially if it's a company that I don't know much about, and even after I've read, whatever their homepage or whether I've read through Wikipedia on them, or a little blurb on them, I'm going to go right down here. I'm going to scroll down to news. All right, if I click news, it's going to come up with a lot of essentially market news, which is of course what I want because I looked up Coca-Cola stock and not just Coca-Cola in general. I want to know the market news on them because they'll usually be mentioned. If most companies will be mentioned in a couple different stories, and a lot of these stories will give you a better, I'd say, general description of what the company is. Or if it's a well-known company, they'll give you an idea as to where the stock sits, if there's been any recent catalysts. So namely, let's just say, for example, a catalyst for Coca-Cola could be something like, hey, Coca-Cola is deciding to buy another beverage company, for example, or Coca-Cola is opening up a new factory in Hong Kong or something like that, right? Those stories give us a glimpse as to what's going on with the stock right now, today, or they give us an idea as to, let's say, if the story is from a week ago, 2 weeks ago, some important news, some catalysts to see where the stock is, why it is the way it is, because ultimately you're not going to be looking up, for the most part, you're not looking up the stocks that aren't moving. You're looking up and want to learn how to analyze stocks that are moving. Okay. Just a disclaimer, that doesn't mean that a stock that doesn't have any recent news is not good. If anything, I actually recommend that you look into stocks that you know a little bit about, or companies you know a little bit about, because these trusty household names are usually the stocks that you can always count on. All right, but that's a different story. We can get into that another time. So like I said, look at the news. You see, hey, what's going on with them? What's up with this stock price? There was one story that said, is $55 a fair value? Good, read through that, understand what it says. Next, we're going to look at this, our first real metric or number that we want to ultimately take a glance at, right? And that is market cap. So MKT cap stands for market capitalization. If we look here, we see that the market cap for Coca-Cola right now is a little over $243 billion. B there just denotes billion, and of course the unit here is dollars. Now, what is market cap? Okay, so market cap, if we want to get really technical, the equation is the stock price, so in this case $56.28, times the amount of shares that they are offering for sale. So the shares, offered for sale, that's actually called shares outstanding. All right, and an easy way to know, let's just say to calculate the market capitalization number would be to just look up CocaCola stock shares outstanding, and I spelled whatever. So we would look here and we would say shares outstanding, 4.32 billion shares they are offering on the open market. And we would take this number and multiply it, like I said, by the stock price, which was 56.28. And that number would come out to the number we have here. But it's not important to ultimately calculate that because it's offered here. This is constantly updated, right? Just a little bit of background on that. Now, what does this number mean, right? What is the point of hearing the market cap? Well, the market cap is the price that the stock market perceives the stock at. And the reason I say perceives is because the stock, or the company, I really should say, even though it's worth this on paper, it may not actually be worth this as a whole. So a great example of a stock that actually they haven't sold any cars yet, or they've sold pre-orders, I believe, but they haven't actually sold anything. They don't have, or their revenue is minimal at best, right? 232,000 was their revenue last quarter, which is tiny. Okay, they of course have a market cap of $62 billion. So you might be saying, how the heck could you value a company at $62 billion when they haven't even really sold anything? Well, I'll tell you how. This stock is where this metric, this price, this market cap number is where people see, or shareholders, or let's just say investors as a whole, see the company being worth once they get started, or perhaps it's a future projection as to what they think the company will be worth. All right, so market cap, again, just because this number says 243 billion doesn't mean that it's a fair number or fair value. And it's our job to figure out whether this number is high, low, or just right. Okay, so after we look at the market cap, we just want to look at it and understand what it is, all right? Next thing I would do is I would go ahead and look right at their financial reports. Now, we're not diving deep into this, and ultimately, as a typical investor, you probably wouldn't understand most of the metrics anyways, but I'm going to tell you right now, the financial reports are easy to access, and the metrics that we want to know are actually right. They're pretty straightforward. Okay, there's only about a couple numbers that you really want to take a look at to see, to see whether or not this market cap is justified. So I'm going to go right over here. You look, there's these different tabs here. I'm going to go right over to financials. Now I click financials, and we can see the date and the month in which these quarterly financials were released. Keep in mind that usually it goes, there's 4 quarters in a year, so there's 4 quarterly reports. The reports will usually be released after a few months of, the quarter per se. And what that means is that at the end of the first quarter, which is April, and in some companies' cases, that's when they would report their revenue and their earnings for the past few months. So January, February, March, okay, April they report, all right? Then April, May, June, okay, July they report, and so forth, right? So right off the bat, I look at April 2021. This is Q1 of 2021. I see a revenue of 9 billion, and I see a net income of 2.24 billion, all right? So these are the 2 biggest numbers I'm going to focus on right here, and they're easy, right? Revenue, all that means is the amount of sales that they had, right? All the money that came in. And net income, all that means is their profit, all right? Pretty cut and dry right there, nothing crazy or exciting, right? So now I'm going to go to their second quarterly report, and I'm going to look and I'm going to see that over the course of April, so Q1 to Q2, they had a $1 billion increase in revenue. In addition, we see a decent uptick in their net income, which is something that we want to just take into account. And then we look at September, and we see again it was still at that 10 billion, revenue number, which is good. And we see the net income of 2.47 billion. So right now they've reported about $30 billion in revenue, and it looks like, let's see, 246, about 7, little over 7 billion in profit. Okay, keep in mind that they are obviously still waiting to release their Q4 report, which we can assume based on the averages here is going to be probably 10 billion in rev and somewhere between two and a quarter and probably 2 3/4 in profit. So with that in mind, I think they're going to end the year of 2020 with about $40 billion of revenue made and probably around just under 10 billion in profit. Okay, so right off the bat, I'm going to go ahead, like I said, go back here. I look at the market cap. So this company is doing, let's say about 10 billion, right? $10 billion in profit, and they are doing about 40 billion in revenue. Now, to be honest, for me, when I hear 40 billion in revenue, again, and only 10 billion in profit, I don't really like a market cap of 243 billion, right? Because, let's just say, for example, for the 40 billion revenue standpoint, which I'm going to show you guys this next metric, but $243 billion versus 40 billion in revenue, again, revenue, that's a pretty big gap, right? That's it's trading at, I would say, a pretty high clip. You're not always going to expect the market cap to equal or to equate to the revenue generated. But I mean, we want to keep it within reason. So if it's 2, 3, 4, 5 times, 6 times, in this case, it's about 6 times what the revenue is. I mean, we want to start asking questions, all right? Now, how can we ask those questions? Well, we can go over right now to 2 different ratios that I want to introduce, which are very, very important in stock analysis. All right. Okay, so in order to get the price to sales and price to earnings ratio of, let's just say, the company that we're looking at here, we can just go over to the search bar. We can just look up, Coca-Cola price P/S. Now, P/S again means price to sales ratio. And all that is the stock price over the revenue per share. So basically what this tells you is, in terms of their yearly revenue, how does their valuation fare? Is the valuation high? Is it low? As a whole, it's saying, well, this company is doing, let's just say, again, in this case, 40 billion in sales, and they're valued at 240 billion. So essentially that, this ratio is just the number for, again, more or less, their market cap divided by their revenue. So again, I said the revenue is about 6 times. Their market cap is about 6 times their revenue. If we look at the price to sales ratio of Coca-Cola, which we go right there, scroll down, we can see that the price to sales ratio is actually, so it's about 6.5, 6.46. All right. So real quick, this website is filled with ads, but one of the websites I like to use for these metrics and some of these charts is just Macro Trends. I would definitely check it out. It's been pretty handy to me, minus the ads. The ads are pretty annoying, and I'll be the first one to say that. This isn't a paid advertisement or anything. I do like the website. Just again, the ads are annoying, but sidetracking there. So price sales ratio, right? So we see this number 6.46. What does it mean? Well, in order to tell you what it means, and I'm not describing what the ratio means, but what the number, this particular number, what it means, right? So just to give you a comparison, an ideal number, an ideal situation would be 1. All right. So a price to sales ratio of 1 or anything less than 1 means that the company is valued at less than the actual sales that they generate. So if you were ever looking at a company that had a price to sales ratio of under 1, it would mean that, in most cases, they're very, very undervalued and might be a good buying opportunity. There's, of course, caveats to that. If the company is starting to shrink or, is going out of business or whatever the case may be, investors may be scared away because they don't have long-term potential at all. So, people could sell a lot and the price could be technically undervalued. Doesn't mean that it's always a buy opportunity. But keep in mind that from the valuation standpoint, it could at least bring up a couple questions. So the lowest it's been in the last, looks like, I think this is the last, 10, 15 years. Lowest has actually been is just over 2. In this case right now, we see, like I said, it's just it's actually just about 6.5, right? So what do I think about that number? Well, again, like I said, I know what an ideal number is, but I'm not going to worry about this number right now. I just want to basically input it in my brain or to keep take it into account, because this number is going to be used to compare to other companies to determine whether or not it's fair for the industry. Now, again, 6.46, so about 6.5 is really not bad. Okay, so some of the highest numbers you'll see are in the 20 range. You can see 25 and 30. You see those numbers or anything higher, usually the stock is pretty overvalued because they're trading at 30 times their revenue, which is absurd. Okay, so first thing, like I said, after we take a look at that price chart and we look at the market cap, we want to go to price to sales, and just like I said, just write that number down somewhere or whatever, put it in your head and remember it. Next thing, we just shift over here to price to earnings ratio, and we see the price to earnings ratio. You can look down at the charts, but usually it'll say the number here is about 24. Okay, so again, same thing. Price to earnings ratio is just going to tell us the price over the earnings per share. This has to do more so with profit than it does revenue, but this is another number that we're going to use to compare to other stocks in order to determine the viability. Now, keep in mind that a really realistic price to earnings ratio can really depend on so many different factors, but personally, I like to see a price to sales ratio of about 10 or anything under 10. If it's under 10, it's usually something that I'll definitely consider in terms of evaluation that's fair. So in any case, like I said, we have our two numbers, so we have about 24 and 6.5. We'll round them up for namesake, right? Now what we want to do to really understand if the price is fair is take a look at a few other companies and compare those ratios, compare the market cap, their revenue numbers. So right off the bat, I know that one of the other beverage companies, of course, is PepsiCo, right? So just look up Pepsi Stock, and we look down here. Keep in mind, right off the bat, you might see $168, almost $169 per share versus $56 per share. This number does not matter at all, okay? Because it does not tell you anything about their market cap. A great example of that is that this stock is obviously, like I said, almost $169, almost $170 per share, yet their market cap is actually lower than Coca-Cola's. And the reason for that is because the stock price, I won't say it doesn't correlate, but it depends on how many times the stock or the company splits their shares, how many stocks they're shares they're offering, etc., etc. I won't go into depth, but ultimately, this is not the only number to just keep in mind. So just because Coca-Cola is $50 and this is over $150 doesn't mean that Coca-Cola is undervalued. So, right, I can see the market cap here. I see, obviously, like I said, the stock price. Now I'm going to go right over to PepsiCo price to sales ratio. Again, same thing I just did for Coca-Cola. And I'm going to go over here to macro trends. Once again, I scroll down to price to sales ratio, and their price to sales is 3. All right, so their price to sales ratio is half of what Coca-Cola's is currently at. So again, that tells me that in this case, either this one's severely undervalued or Coca-Cola is overvalued. Now I won't say severely, but is either undervalued or Coca-Cola is overvalued. All right, same thing. I'm going to shift over to the price to earnings, and I'm going to see here their price to earnings is 27.3. So far it's looking that Coca-Cola has a better price to earnings, meaning that they're able to make more money. Or they generate more in earnings per share than Pepsi. But at the same time, of course, like I said, their price to sales ratio is double what Pepsi's is. Pepsi's trading at about 3 times their revenue, and Coca-Cola is trading at about 6 times. All right. Now we'll throw a third one in the mix to really get the best gauge here as to what we are looking at. The third one off the top of my head is that we're probably going to roll with here is going to be Monster. Let's see, Monster stock price of sales. So it came out weird, but there we go. Okay, so Monster is actually a smaller company. I won't say this is a bad comparison, but it's not always the best. They're also they're a beverage company, but slightly different. So just some things to consider. All right. If we were doing, let's say, car manufacturers, we would do some of the giants, like, for example, Ford, General Motors, and let's say, Toyota or something, right? And by taking a look at those, again, we would just ultimately compare the numbers. But nonetheless, we want to keep them within roughly the same market cap, same industry, and from there, like I said, just we'll take into account the fact that Monster is a bit younger of a company, so their valuation might be a little bit different. Just some food for thought on that. Now, head right over here to macrotrends.net. Same thing again, like I said. Look at the price of sales, and we'll see that the price of sales is about 9. Okay, so now we have a range of between 3 and 9, all right, in terms of price of sales. Then we're going to look at the price to earnings ratio. All right, their price to earnings ratio is 34.5. Okay, so larger than both Pepsi's and Coca-Cola's. All right, so we have all those numbers now, and what do we do, right? What should we take into account? What should we understand? Well, based on the price to earnings ratio comparisons, right? I would say that as a whole, if we go back to CocaCola stock, as a whole, the price to earnings ratio is lower than Pepsi's and Coca-Cola. And Monsters, but it's not by much. What that means is that they're generating more, like I said, or better earnings per versus their revenue, but at the same time they're trading at a pretty decent clip in comparison to their revenue. So their revenue versus their market cap is relatively high. All right, now can I make a buying decision off of that? Well, if I'm talking about a buying opportunity, and that's ultimately what we want to know is, should I buy this stock or should I not buy the stock? You have to take into account a few more, I'll say, factors or elements before really doing anything. All right. So before I buy a stock, I also want to know when their next quarterly report is, when or some upcoming news for them, some upcoming catalysts, some recent catalysts to see if it's worth it. Like I said, in the last 5 days, it went up over 3.5%. Why is that? That's something I want to take into account and to look at. Over the last month, right? So over the last month, it's dropped, almost, or actually over 0.5%. Well, I want to know why I should buy here if it was just at, 52.30, right? And if I look over here, the 6 month chart, I see, obviously, like I said, up, down, up, down. So in terms of, do I want to buy this company? Well, like I said, I think you have to take into account the environment as a whole before you make any buying decisions on this as a whole. Now, Coca-Cola is a trusted name, so I can never say that they are out of place whatsoever or that they're a poor investment. However, based on their price to sales ratio, I don't love it. I also know that Coca-Cola doesn't have any cutting edge technology or any amazing innovations in the works. So it means that for me, their long-term growth potential is not non-existent, but at the same time, I'm not going to buy this company to get rich off it, right? When we invest in a company, we want to obviously see growth, buying in at a fair value, but at the same time, we also want to have some safe stocks, right? And Coca-Cola, again, is a trusted name, so I would buy Coca-Cola, just not at this price. What I'd likely do, especially given this current environment, is I would wait until we start to see some of the, if you're not well-versed in the news currently, basically the Fed is talking about the pullbacks and increasing interest rates. Once those go up, the stock market as a whole will take a pretty decent downtick. Probably over the next 2 years, we'll see some great action downward, some pressure downward, I should say. And so when that stuff comes up, I want to buy Coca-Cola at the lower end of that price to sales ratio. So if I know that Pepsi can trade at a price to sales of 3, I want to buy Coca-Cola probably at a price to sales of 3, right? Coca-Cola, in terms of their revenue, they did, like I said, about 4. Well, so they did. This was a 2019 figure, but it looks like this year they're going to do about 40 billion. And then, obviously, if we looked at Pepsi, their revenue, it doesn't have it here, but if we look at the financials this past year, their revenue is probably looking somewhere in the, so we got 15, about 20 and 20, so it's at 40, 55. They're probably going to be in the 60 to 70 billion range, I would say. And so if we take that into account, obviously, Coca-Cola has some room to grow. I think Pepsi is, even though their market cap is lower, they're a bigger company. If anything, I'd probably consider buying Pepsi. again, for the same reason as of course that simple price to sales ratio. But at the same time, with a price to earnings ratio that's not much more impressive than Coca-Cola's, I might wait a little bit. It just means that they're not generating that much additional income based off their revenue. So I don't want to continue this long-winded discussion to the point where it confuses you guys too much, but just real quick, take into account that even though they have, what looks like they're going to produce almost $20 billion of additional revenue, their net income is probably going to be right around the same. So I also don't like that. They're producing more revenue, except their profit or net income is the same, versus Coca-Cola's, which of course would be smaller revenue but about the same in profit. So those are actually all great points to consider. Again, in terms of determining the buy or the sell, well, I'm not buying a company until it has a fair value. I'm usually not buying based on perceived or projected growth. I'll make another video talking about how you can buy into companies and and anticipate their growth and understand what their growth would mean for their value. But this is ultimately how to analyze and value a stock. All right. So again, those numbers, they give you a rough idea as to where the company stands. They're, in terms of, like I said, the Coca-Cola valuation as a whole, I don't love it, but at the same time, it's really not the worst I've ever seen and that you're ever going to see. So all I would do is I would consider, like I said, the simple fact that if we go back to the chart, that the price movement over the most recent developments here has not really been growth, and with, again, the current environment, I would not necessarily recommend buying Coca-Cola. All right, but this is only these are not recommendations. This is only for entertainment purposes. So I will say that please take that into account. Again, I would heavily consider the valuations and then make your decision from there. Obviously, the decision is your decision. But again, that is ultimately what I do to at least initially gain some exposure as to what the company is and where the price currently sits. So I appreciate you guys taking the opportunity, taking the chance to watch my video. I hope that you take the time to look at some of the other videos. This is ultimately how to analyze a stock, how to value a stock. If you did enjoy this video, please give it a thumbs up and subscribe. I would really appreciate it. The channel would certainly continue to grow pretty heavily if you were all to do so. Again, thank you for taking the time to watch this video, and hopefully we will see you in the next one. Thank you.